Hello and welcome to Moneylife News and Views. I'm Debashis Basu. This time, I'm not going to talk about markets or businesses or strategies and so on, but something completely different, which is in public interest. And I'll start with a story. In December 2021, D.S. Rangarao, who's a retired government official, was visiting his bank branch with his wife. This was a State Bank of India branch somewhere in the suburbs of Mumbai in Thane. Now, while in the locker room, he fell from a shaky, unstable ladder and fractured himself, his legs needing surgery. State Bank of India, the branch people, refused to acknowledge any responsibility or offer any compensation. The bank officials wouldn't even call for an ambulance until insisted upon and paid for by Mr. Rangarao. Now, this was obviously a case for a complaint. So, guided by Moneylife Foundation, Mr. Rangarao complained and went through the entire process which the RBI has laid down, which is first file a complaint with a branch and then escalate to the different levels in the bank and then finally to the banking ombudsman office. As you would expect, as any banking consumer who was filed with the banking ombudsman would expect, he was rejected. So he was rejected all through at every level. This case was so egregious that Moneylife Foundation wrote to the higher levels in the RBI, and State Bank of India finally offered him compensation. No, not the entire amount, but almost the entire amount of his costs, but no compensation for the harassment and the suffering. Now this, as you would know, is one of the mildest stories of the kind of things that people go through in public places. Every year, tens of thousands of people are maimed or killed in public places. And when I mean by public places, these are banks, restaurants, cinemas, theaters, malls, hospitals, hotels, airports, or while accessing public infrastructure, which is bridges, roads, and ropeways. The terrible disaster at Mobi just a few months ago would be fresh in mind when 135 people were killed when a bridge collapsed, and many more were injured. The most horrific of such, the template of all of this, is the Bhopal gas disaster, where tens of thousands of people have got killed or maimed. Now, all these situations come under a very specific label or a rubric, which is called public liability. Public liability is a branch of law of torts, it's called. And the whole idea is that if you cause harm to somebody else or his property, or if you cause a financial loss to somebody on their premises or due to the operations that you've been running, you are liable to provide financial compensation to the victim. Now, does it work in real life? We all know it doesn't. And the example that I gave started with this very mild example, as I said, in State Bank of India didn't work unless SBI was forced by the higher authorities. They wouldn't even bother. And banking ombudsman had rejected the claim. There's no deficiency of service, he said. How amazing. In India, 7 years after the Bhopal gas tragedy, this tragedy was so enormous, it was indelible in the public mind, the government enacted what is called Public Liability Insurance 1991, which made compensation and insurance mandatory, but only for hazardous industries. Businesses often take what is called a general liability cover, which can be used to compensate victims, but there is no mechanism, compulsion, or public pressure to do so. Indeed, State Bank of India didn't have to compensate Mr. Rangarao from its pocket. It already had a public liability insurance by which the compensation could have been taken care of, but the branch was unaware of it. I don't even know if the head office knows about it. This is also the plight of victims of accidents or fires caused by faulty equipment or improper maintenance at all public places. Now, since insurance is non-mandatory and awareness is low, I'm talking of general public liability. It is not mandatory and awareness is low. And so therefore, liability insurance is practically useless in dealing with public tragedies such as fire in a mall or in cinema houses. All we have is ex gratia payments and ad hoc payments handed out by the government. What needs to be done? A recently released report by Moneylife Foundation, which was authored by Uttara Ved Advisory, has identified various lacunae in both PLI, which covers hazardous industries, and also general liability. It has a lot of recommendations to make. The report has been circulated, sent to various people who have the ability to change regulations and make it more workable. But in short, the first step would be to expand the Public Liability Insurance Act and make it mandatory for businesses and other non-commercial organizations, anyone who can cause injury, death, damage, etc. to the general public. This is very simple. Why only hazardous industries? Why not a road which is badly built or a pothole over which somebody tries to drive and gets killed? Somebody has to be liable and there has to be compensation. It can be insured, possibly. The report also suggests setting up a separate tribunal. And now we already know that something like this works very well, which is the Motor Insurance Claim Tribunal. So we can have an overall public liability insurance tribunal so that these cases can be handled separately and can be fast-tracked. This report is there on our Moneylife Foundation website. You can go ahead and read it. It's a very comprehensive report. There is another approach to handle public liability, and it is much more difficult. But for some reason, the Economic Advisory Council, which is headed by Bipek Debroy, they are thinking along these lines. They have just issued a paper called Fair Compensation and Accountability: Why India Needs Punitive Damages and Stronger Torts Law. This report narrates the 2014 tragedy of an 11-year-old girl who was drowned in Sikkim due to the sudden release of water in an upstream by a National Hydroelectric Corporation. The Sikkim court awarded damages of a compensation of 5 lakhs. 6 years later, the same thing happened. This time, 2 people lost their lives. The Sikkim government now said that you would have to award 35 lakhs each, because last time this happened, we've issued guidelines, we've told you to take due care that when you issue enough of warnings before releasing water, and people have drowned again because of your negligence, so this time it's going to be 35 lakhs. And these are very ad hoc kind of a thing. So the paper argues, quite rightly, that if we had codified torts law and had imposed exemplary cost, let's say 50 crore in the first instance itself of negligence, perhaps the guidelines would have been implemented better and then no repetition of tragedy may have occurred. In the US, this is called punitive damages. The whole idea of punitive damages is a monetary fine far above, more than the actual damage. The idea is to eliminate the need to keep developing new legislation each time a new form of injury or violation occurs. It would also prevent, the paper says, a repetition of denying adequate relief to victims, as happened in Bhopal gas tragedy. Now, is this workable in India? It sounds great. There has to be punitive damages. Why only 5 lakhs? Why only 35 lakhs? Lives have been lost. Why not 5 crore, etc.? The problem is that this requires massive sensitization of both the judiciary as well as the legal profession, the entire legal ecosystem, because judges and advocates find it extremely difficult to accept the concept of any damages, any compensation, forget about punitive damages. In clear cases of negligence, well established, proven, whether civil or criminal or consumer courts, the judges cannot stir themselves to offer adequate compensation. Forget about exemplary damages. Also, the idea of punitive damages goes hand in hand with another part of legal ecosystem which is there in the US, which is contingency fee for lawyers. They get a bad name, they're called ambulance chasers. But because the benefit of that, because of their presence of contingency lawyers, people get compensation and a benchmark of due care is set. A very strong message is sent because of the presence of contingency lawyers who work with plaintiffs and say, okay, If you get so much of damages, give me so much of the share. Without this, there is no incentive. It creates contingency fees concept, it creates an incentive to go after negligent bodies. In India, lawyers simply have no incentive to seek punitive damages for their clients and actually discourage demand for compensation, fines and penalties beyond actual costs. How do we know? We know it with our own personal experience. When the Bombay High Court imposed an unprecedented 50 lakh fine on National Stock Exchange, 47 lakhs was meant for 2 hospitals, to harass us with the defamation case, the fine alarmed the senior advocates, although they themselves would freely charge 50 lakhs or more for a few appearances or even non-appearances to their clients. While contingency fees and punitive damages are the right steps, it would be very tough to implement them. There would be unified opposition from businesses and their shills or the supporters or the legal mouthpieces within the legal ecosystem who have the most to lose. It would be far more practical to amend the PLI Act with steep inflation-adjusted compensation. But even that would not be easy to implement. The government itself would strongly oppose them, especially the state governments, which are responsible for state governments and local authorities like municipal corporations or municipalities. They are responsible, after all, for innumerable tragedies, such as potholes, to bad roads, to no signage, to collapsing bridges, and so on. It will require tremendous political will to bring about public liability insurance and punitive damages. But we deserve it, and it should have been done many decades ago. Thanks for watching, and if you do like it, please share and subscribe.